Good afternoon, everybody. This is Troy Williamson with Cornerstone Home Lending. I just wanted to give you guys an update on what's going on in the market as it pertains to interest rates right now. I'm sure everybody's heard a lot in the media recently about the government, the Federal Reserve, increasing interest rates. And I think everybody's initial reaction is that they believe that that means that they're increasing mortgage rates. And that is not necessarily true. What they're actually doing is increasing the federal funds rate, which is the rate at which banks borrow money from each other as well as the Federal Reserve. The reason why they do that is if banks are paying more for the money that they're borrowing, they're typically going to pass that expense on to the consumer, which means that it ends up being more expensive for the consumer to borrow money. And that ultimately will result in a slowdown in the economy. What that does is they're trying to fight inflation. They're trying to bring inflation back down to an acceptable range, which is what the Fed says is 2%. Right now, we're well above that. Although it's hard to kind of get an accurate gauge of what inflation truly is because gas prices continue to increase. It's just really hard to get an accurate idea of what that figure truly is, but it is well above the target range of what the Fed wants the rate of inflation to be. So by increasing, again, that borrowing interest rate, it's going to slow down economic activity. It makes things more expensive for the consumer. And ultimately, that will slow down the economy and bring inflation back into a range which is acceptable. The hard part about all that is the government, usually when they increase the Fed funds rate, it usually takes a couple of months to kind of funnel through the impact of that increase through the economy. And so they're trying to increase expeditiously in order to get inflation down and back in check, but at the same time, trying to be careful about not increasing too terribly much because that could put the economy into a recession, and they don't really want that to happen either. So, long story short, when you hear news, the media is saying that the interest rates are going up, it does not directly mean that the mortgage rates are going up. Indirectly, when the Fed increases the Fed funds rate, that oftentimes can lead to mortgage rates going up slightly because it brings about concerns about the condition of the economy. So I'm not saying that doesn't necessarily mean that mortgage rates can't go up. I do believe that once inflation numbers start to come back down, that mortgage rates will come back down. They'll follow suit. Mortgage rates hate inflation. And so as long as inflation figures remain high, mortgage rates will likely remain at current levels or potentially even go a little bit higher. But I do think at some point in time, we'll see a little bit of reprieve. Mortgage rates will come back down again. Don't necessarily think that we're going to see rates in the 2s and 3s again. It would be nice to get back down into the 4s. The important thing to remember is, right now, high 4s, low 5s. Historically speaking, that's not that bad. You think back into the late 70s, early 80s, interest rates were 16 and 18%. Granted, the price of homes back then was considerably lower. So it's not an apples to apples comparison, but it could be a whole heck of a lot worse. We do, again, anticipate that rates will stay somewhat at the same levels of what they are right now, potentially go a little bit higher, hoping not that much higher. But it's really hard to say for sure because it depends upon what inflation is going to do moving forward. I'm going to get into the habit of sending these updates out relatively frequently so that everybody can kind of follow our updates and get a good idea of what rates are doing moving forward. And we'll talk about here relatively soon about some options from a mortgage standpoint where you can secure your interest rate for an extended period of time, either on new construction, or you can even secure your interest rate up to 150 days before you've identified a property. So we'll talk about that soon. Stay tuned for some more updates coming up. Hope you guys have a great afternoon. See you soon.